Awesome. Welcome, everyone. So a formal introduction for anyone that's joining us on the recording as well. We were just saying we're so pleased to be covering this topic at VetU this evening, tax for employees, something that we've not done as a full webinar previously, yet we are asked so many questions around things like tax codes, benefits in kind, company cars, expenses, claiming back memberships, what are the tax brackets, have I underpaid or overpaid on tax? And if you keep your ears open for the evening and jot down some notes, I am sure that this will be financially beneficial by the end of the night too. I know we were saying just before you'd all jumped in from the waiting room that sometimes this is something we have to be super proactive with, advocate ourselves, educate ourselves, because there might be some extra cash somewhere, or there might be something that we haven't considered that can mean that we can go and check that out further. And we'll be signposting loads of resources this evening too. So let's get started. The first things first, at VetU, there is no such thing as a stupid question. If you're wondering it, somebody else is probably wondering it as well. So please do get it in the chat box, which you'll find at the bottom. You can direct message myself, Paul, Matt, Nicola. Will keep an eye out on the chat. We'll feed those in so we can make sure that everybody has their questions answered. And again, we realise that quite often tax is quite a complicated topic. There's lots of intricacies, lots of ins and outs to it. That's why we've got a fantastic financial expert, Nicola, with us so that she can answer those questions. If there is anything that you want clarifying, you spot any jargon and you think, my goodness, like, can we go back to that bit? Get it in the chat, because again, you're probably not the only one. Let's make sure that we go away from this knowing our action points and making sure we're clear on who we need to speak to, what we need to do, what resources that we need as well. So before we do get started, I'm going to hand over to fantastic VetU original founder, Matt Dobbs, who's going to tell you a little bit about who we are. I know plenty of you know us already, but Matt, over to you.
Hi, yes, good evening, everybody, and welcome. Great to have you along. I've got one eye on the football. I can tell you, you're not missing anything at the moment, so you need to stay right here. If for no other reason than, you know, the old proverb which says there's nothing so sure as in life as death and taxes. Well, I can tell you, when it comes to employee taxes, they're changing all the time. So while they may be certain, the absolute, in terms of absolutely needing to pay them, what you need to pay, when you need to pay, how you need to pay will be changing with every different government, with every different budget. So we're going to learn so much tonight, and I'm really looking forward to everything that Nicola has to say, irrespective of whether you're self-employed, an employee, a long time in the world of work or a short time in the world of work. We're expecting to learn a lot. I wanted to just give you a flavor of what VetU was all about and how it came about. The idea of VetU is purely to make sure that vets think a little bit more around three areas of their financial independence, because, dare I say it, with financial independence, that can give you the bedrock to create your own personal professional independence and allow you to pretty much tackle anything that a career in veterinary medicine may entail. So without getting that bedrock right, you can sometimes struggle with your career, even if you're the world's best clinical vet, simply because you haven't put in place some of those things that will give you the confidence to help you make the right decisions in both your personal and professional life in the future. And VetU is hopefully a resource simply to give you the confidence to make the right decisions around your financial independence. And we focus on three key areas because we believe there are three areas that are vital to you in your career and in your personal life, and which are all impacted on by your finance. The first is around your health. So while clearly there are things that you can do to improve your health, like keeping fit and eating well, there are things that also that you can do to support your health financially, making sure that you have the right cover for when you fall ill or when you need the help of an additional healthcare assistant. The second area is around your income. Really important. All of us need an income to live on, doubtless, and that can come obviously from our employment. But what do we do if we can't work, and how we make sure that we've got the security of keeping an income irrespective of what happens in our personal circumstances? And the third area is planning for our financial future. We all want a time when maybe we're not earning or when we're unable to earn? And have we got plans to make sure that that is going to meet our outgoings and our needs for our own personal circumstances? So that might be investments, that might be pensions, that might be things like life assurance. So those are the three key areas: health, income, and future. And if you haven't thought about those three areas, and dare I say it, got financial products that can support each of those three areas, now's a great time to start thinking about it. Go to the VetU website, where you'll find a lot of resources. You'll find a lot of them also via the social media channels. And, I realize I'm preaching to the converted. By simply being here tonight, you are already investing in your own financial independence and security of the future in those three areas. So thank you for joining us. The last thing I wanted to say is we really want to learn from you as well. We're learning every day about what's important to vets around their financial independence. When I qualified last millennia, I can say that, there were many more tools, dare I say, available to vets to help them make decisions about their health, their income, and their future in regards to financial products. For different reasons, the market has changed, and the accessibility and the availability of knowledge, while we can all switch on the internet and do Google search, that may not give us the information that we need for our own individual circumstances. And that's where really VetU wants to fit in. We want to make you the center of your financial world and make sure the advice and the products that you're taking on are fit for purpose for you. Thank you, Katie.
Thank you so much, Matt. Wonderful as ever. And ironically, actually, this session is one of the examples of where we listen to exactly what you want, because it was feedback when we were at the beginning of the year planning our webinars. What do you want content on? And actually lots of people asked for taxes for employees. So we do listen. So just as Matt says, keep your feedback coming in, because we want this to be as useful as possible. So really briefly, what we're going to cover this evening, Nicola's going to go through a huge amount looking at our different tax brackets, understanding tax codes, understanding benefits, expenses, whether we need to fill out self-assessment. So she's going to go through lots of different things. Keep the questions coming as we go through there. I'm just going to get you, if you can, to drop into the chat box for me. Or in fact, let's just see if we can do this as a poll. If those listening, I realise that at the moment, it might not be possible for everybody to vote, but if you can, drop us a vote just to let us know who we've got in the room here. So are you employed full-time? Are you employed with a side hustle? Are you 0 hours umbrella? Are you a locum or a business owner, a student or other? We realise this is very much aimed at those that are employed, whatever that definition of employed actually is here, but I can see most people are saying that they're employed full-time or they've got a side income stream, which will become relevant when Nicola's talking a little bit further on for us to know who we've got in the room. So thank you everyone so much for taking part in that poll for us. Make sure that we take everyone into account. Matt very kindly explained who VetU are, what we're about, what's valuable to us. Just briefly on the screen here, you can see the whole VetU team. You might see many familiar faces on there. Paul, Matt, and myself were on the call tonight. Ebony is the 4th member of the VetU team. She is off on another event this evening, but you'll see all of us at plenty of the webinars. And then I'm so pleased for us to introduce our fantastic guest this evening, who is a chartered accountant and chartered tax advisor. Nicola has been fantastic with so many of our VetU community members. She's helped me, she's helped my partner with my taxes over the years, my businesses. Always gives us so much information in the webinars that Nicola very kindly gives her time for. You can see a lot about Nicola's background. She's got a lot of experience, particularly within the medical sectors as well, managing a lot of GP and medical accounts too. So we're really thrilled that Nicola has given us her time this evening to talk through this topic. As we've said already, there's a lot of information that we're going to cover. So please do call out anything that you want clarifying. Matt, Paul, and I will be on hand to help you with that. So Nicola, thank you so much for being here this evening and for gifting us your time.
Thank you, Katie, and thank you for the kind introduction as always.
You're welcome. I know that we did have some pre-submitted questions, which you're going to touch on as we go through, but to give you a flavour of the kind of things that those of you that are jumping on the call were interested in us covering. And I know there's going to be so much more than this because, again, I know Paul, Matt, and I were saying at the beginning that my goodness, this is such a wider topic than we even realize, but things like company cars and benefits, do we need to do a self-assessment as well, claiming expenses as an employee, and considerations when maybe moving between those tax brackets. So I know you're going to cover some of those things and we'll come back to those pre-submit questions, but just so everybody's got a little bit of a flavour of the kind of topics that we're going to touch on. So I shall move this along for you, Nicola, because I know we've got a starting point here.
Lovely, thank you, Katie. I thought we'd start with just very basic tax rates and national insurance rates for employees. National insurance is not technically a tax, but is as good as, so important to consider as alongside income tax as well. For those that follow tax and follow the budgets over this financial year or this calendar year, will know that we're playing a bit of hokey-cokey with tax rates and allowances this year, particularly with national insurance. We'll try and cover this as simply as possible. We're all entitled to a personal allowance, which is a tax-free amount that we're entitled to earn each year. And at the moment, that is £12,570. And it's also been announced that that's going to be frozen now, I think, right through to 2028. So we won't see any inflation increase in that for a while, we think. We then, for those who have earnings above £12,570, we then fall into what we call the basic rate band. And this is where we pay tax at the basic rate of income tax, which at the moment is 20%. And we have about £37,700 of income that we can earn at basic rate, which takes us the right way up to earnings of £50,270 to be precise. We then have what we call a higher rate band, from a pound over that up to £150,000. But that limit is going to drop right down to £125,140 from next April. So there is a band there where taxpayers are going to fall into the additional rate of tax, where at the moment that only applies to people that are earning over £150,000. But again, as I just said, from the 6th of April 2023, that additional rate is going to kick in from £125,140 of income. So again, at the moment, we're paying higher rates of tax at 40%, and for those lucky enough to be earning in the additional rate band, that's at 45%. It's important to consider as well, and I've not mentioned that on the slide, that actually there is an additional threshold of £100,000. Again, if you're lucky enough to be earning over that limit, the personal allowance starts to be removed. That £12,570 starts to reduce all the way down to nil. So again, if you're earning over £125,140, you're not entitled to a personal allowance anymore. So tax rates can start to get very hefty, above £100,000. So that's income tax. We also have to consider national insurance. That is a bit all over the shop at the moment with the national insurance levy of 1.25%, which has been in and out during this tax year. So at the moment, we're paying 12% national insurance, where we're effectively a basic rate taxpayer. And where we're a higher rate taxpayer, we're paying at 2%. And there's a slight error on that slide, I think, apologies. And employers will pay 13.8% on your wages above the employer's threshold. But again, that shouldn't impact on your own wages or your own take-home pay. That's an on-cost that your employer has to pay. The one useful thing with tax for employees opposed to self-employed people is this is all deducted from your pay by your employer. It's dealt with by the payroll team with your employer, and you should just receive your net pay at the end of the month, which is your money to spend. There may be some errors or discrepancies on that, which we'll cover a bit further on around tax codes and expense claims and reconciliations and things. I've not covered thresholds or rates, but it's also important to remember that where you have a student loan, that will also be deducted from your wages by your employer on a monthly basis as well, which can be quite an additional sting in the tail.
And just to clarify on here as well, Nicola, because I know quite a few people ask us this, if, for example, you suddenly move into the next tax bracket. So, for example, if we're in the position where we earn £48,000 per year and then we move to £55,000 per year, we don't suddenly then pay 40% on all of our income. Is it 40% in just that difference between 48 and, well, between 50,270 and the new income, just so people are clear on that?
It is, yeah. It's what we call a slab system. So you pay 0% tax where your earnings are less than effectively £12,500, 20% tax for your income that falls in the basic rate band, and then just the higher rate on the income that is over the £50,270. So we don't, as soon as we hit £50,271, we don't pay 40% tax on all our earnings. It's just on the excess above that rate. So actually your overall tax rate could be a spectrum between 0% and 45%, depending on your specific earnings.
Makes sense. And I know you're going to come to tax codes as well, but everything should theoretically be automatically calculated for your wages going through if you had, say, a pay rise where you did move into a next tax bracket.
Yeah, absolutely. The tax code system is designed to collect the right amount of tax at source. As with most things in tax, doesn't always work 100% all of the time correctly, but again, we'll cover how we can check that and make sure that we are paying the right amount of tax on later slides.
Amazing. So we're going to go on to a bit more on ways to save some tax, which I'm sure will be of appetite to people on the call.
Yeah, we talk a lot about in other webinars for self-employed people and limited companies of various different ways to save tax when you're running your own business. Unfortunately, ways to save tax for employees are much more limited, and even within the ways that we have, they are even more limited than for businesses as well. So there are expenses of your employment that you can claim tax relief on, and we'll cover what some of those are in later slides. Pension contributions. This is really relevant for higher rate taxpayers. So when you start to be paying 40% tax, it's possible to get additional tax relief on your pension contributions. Gift aid, again, for higher rate taxpayers, it's possible to save some tax at higher rate on gift aid contributions over and above what the charities can reclaim on your behalf. And then also thinking about salary sacrifice, which again, even if you're a basic rate taxpayer, we can save some tax by making pension contributions via salary sacrifice as well. And again, we'll cover all this in more detail on future slides. And then the last point in that slide is how we get that tax relief and how we make sure we're paying the right amount of tax in the different. There's a lot of jargon on that line, but we'll cover that in less jargon there.
Super.
Slides.
So I know we're going to go through each of these in a little bit more detail in a second, aren't we, just here? Which is awesome.
So I will apologise in advance for the jargon on this slide. It is very technical and a lot of words, but I think it's probably one to come back to and digest later. But it's trying to demonstrate that employment expenses are very restricted. The rules are much tighter for expenses of employment than they are for businesses. So example, to be tax deductible for a self-employed person or a limited company, the expenses just have to be wholly and exclusively for the purposes of the trade or the business. Whereas for an employee, they also have to be necessary for the employment and also in the performance of the duties of the employment. So two additional conditions, which is why the amount of expenses that can be claimed as an employee is much more limited and much more restricted. So to try and put some of the techie words there into a bit more of English, shall we say. Firstly, the expenses have to be wholly and exclusively for the purpose of your employment. That means there can't be any mixed use. So food costs and clothing are mixed because we have to eat to live and we have to wear clothes to keep warm and for decency purposes as well. So which is why clothing and food is really quite restricted because of that mixed use. They have this word necessarily makes the rules really tight. They have to be necessary for the purposes of the employment. And there are lots of case law where judges and HMRC have argued very narrow definitions of necessary. And one of the key factors around that is all employees have to incur it. It can't just be necessary for one employee. It has to be necessary for the job so that all employees would have to incur it, which makes it really quite a tight definition. And in the performance of the duties of the employment, again, a bit of a something and nothing comment, but actually that makes it really restrictive. It's got to be an expense that you incur while you are actually performing the duties of the employment. It can't be before you do it or after you do it. It's got to be during the performance of the employment. So again, really quite restrictive. And training is a good example of that. If you're training to do a job, it's not during the performance of the duties. It's something you have to do before you perform the duties. So hopefully that's slightly less jargony. And we'll have, on the next slide, Katie, I think there'll be a few more detailed examples of how that works in practice.
Yeah, this, we were saying just before we jumped on, actually, this was one of the big moments I found as an employed vet at the time, realizing that this was actually something I could claim back, realizing that because I was paying my own RCVS membership every year, obviously we can't claim the full amount of it back, but we can claim back the tax we would have paid on that amount, isn't it? So when we're paying, say, £300, we might end up being able to pay back 20%, claim back 20% of that. That's right, isn't it?
That's right, yeah. This is quite a generous relief, really. It's in the law that you're allowed to do this, and there is a list on the HMR website of all the subscriptions and the membership organisations that HMRC consider to be tax deductible, so really quite straightforward. Our CVS is a very good example of that, as is the others that you've got there on the slide. Again, a common one in your profession and other professional services such as mine and accountancy, we have a lot of those as well. Again, so that's a very good one to claim, a very common one. And again, we were saying again before the session started, Katie, that HMRC aren't necessarily going to come to you and tell you to claim these things. You have to be proactive about it and go to them, and we'll cover in later slides how we do that. So getting memberships is a really good one. Uniform, protective clothing costs and maintenance is another one that's reasonable. Again, clothing is quite a restrictive claim. It has to be specifically uniform or specifically protective clothing costs. Anything that you wear around that is not allowable. So often that's not a really very useful one because your employer will often provide you with those, so you don't have to pay them yourself. But where you have to launder your uniform yourself, so take it home and use your own washing machine, etc., you can claim for the cost of doing that. And HMRC have a fixed sum deduction for that. So again, in the veterinary profession, it's £60 a year that you can deduct from your employment income for the costs of laundering your uniform. Again, the tax relief on that is £12 for a basic taxpayer. But again, once you've got it in your tax code or once you've made the claim, it will stay there, and it's just useful tips. Mileage, again, is a good one where you're travelling on business miles. HMRC allow a 45p per mile claim up to 10,000 miles and then 25p per mile thereafter. Some employers will reimburse the full amount, some will reimburse none, and some will reimburse a proportion of that, perhaps 20p a mile, 25p a mile. If your employer doesn't reimburse you for the full 45p/25p a mile, you are allowed to claim the difference against your tax. Again, it is for business mileage, so it's not normal commuting to and from a surgery or a practice. It's business mileage to if you ever did home visits,
Like a home visit, I was going to say,
training courses and things like that, if they weren't fully reimbursed. Pension contributions, not technically expense, but we can get tax relief on the pension contributions, and we'll cover that in more detail on a separate slide. Working from home, this is again quite a tight definition of who and how this can be claimed, but because of the COVID pandemic, this was relaxed, and for a 2-year window, this is a very generous relief, and you can claim a £312 deduction per year against your income. So again, possibly not overly popular with vets, but if you do any kind of homework in telephone, online consultations in the veterinary profession, might be one to think about. The rules become much more restrictive from 22-23. So again, the devil's in the detail with that one going forward. And we've covered fixed sum deductions. That's mainly around laundering, uniform, should you wear uniform? And again, to be specific, it has to be uniform. It's not normal clothing that you're laundering at home to wear for work. These expenses can be claimed via your tax code. You can phone HMRC up and tell them that you make these contributions, and they'll amend your tax code and collect it at source. You can complete a form called a P87 if the expenses total less than £2,500 a year. Again, if you just Google P87, it will take you straight to the form. You fill it in, complete it, submit it to HMRC, and HMRC will give you a refund on that. And then if your expenses are higher than £2,500, you have to do a tax return to claim them. Or if you're doing a tax return for other purposes or other reasons, you can also claim your employment expenses on the tax return as well. So lots of different ways to do it. But again, you have to be very proactive about doing it. HMRC ain't going to come to you.
And just to check, because you can backdate some of those expenses, like how far back can people backdate that?
Yeah, you can only go back a few years, and every year another tax year window closes. So at the moment, we can go back to 2018-19.
Yeah.
And the claim for that will end on the 5th of April 2023.
Amazing. And I remember doing this, I know I just said a few years back, and you could do it online, I seem to remember. And like you say, you found the form, and even for things like how much can I claim for protective clothing, it gave you a guide to go through. Like HMRC website does often, like click this, click yes or no, and comes through with the decision for you. And I was quite surprised by how much, after claiming back 5 years of like RCVS fees, a couple of memberships, maintenance of clothes, I ended up with, I mean, at that point for a few years, probably like £300 or so. So it was worth the time to put in and look at it. And like you said, it's just, if you're listening to this, be proactive and go and have a look, because we might be surprised how much we could be owed if we take the action, right?
Absolutely. And then once it's been, the claim's been done, it will usually then end up in your tax code, and it'll just automatically be deducted year on year. So then you don't have to do anything to get that tax relief going forward, which is a nice place to be.
And you might end up with a check if you're owed some cash. I remember being very excited because it came in the post and it was very well timed. So yeah, amazing. Are we happy moving on to the next slide?
So this is around pensions and gift aid. So this is really relevant for higher rate taxpayers, those whose earnings are more than £50,000 to £270 to be precise. Because I think not many people realise that you can get higher rate tax relief on pension contributions and gift aid, but again, that has to be a proactive claim to get that. And can often, if you are in higher rates of tax or in additional rates of tax, can be a really useful tax planning exercise to make these contributions to save tax. So if you make personal pension contributions, personally, everybody is entitled to an additional £20 that the government will top up your pension by. So if you pop £80 into your pension as a basic rate taxpayer, the government will give you what we call basic rate tax relief on that. They'll give you the basic rate tax back, but they won't give it to you. They'll put it in your pension. So that £80 that you've paid into your pension becomes £100, which is nice. A little bit of extra money to work towards your retirement. For higher rate taxpayer, the government will do the same. They'll put the basic rate tax into your pension, and the pension companies will do this. They'll make all those claims on your behalf and deal with it all. So there's nothing you need to do to get that tax relief. So again, for higher rate taxpayer, the pension company will do the same. So if you put £80 into your pension, the government will add another £20. But then you are also able to claim what we call higher rate tax relief on those pension contributions, which means that you can obtain a further £20 income tax relief that the government will pay to you. So ultimately, by the time you've had the £20 put into your pension pot and you've claimed the £20 back from HMRC, that £100 pension contribution that's in your pension and working and earning and growing for your retirement has actually cost you £60. So again, that £20 higher rate tax relief has to be proactively claimed. You have to put it either through your tax code, through a tax return, or phoning HMRC up to tell them. But again, a worthwhile exercise to do, because if you're planning well for your retirement and making significant pension contributions, that £20 can add up.
Yeah. So in terms of that, Nicola, I know you said that you could call HMRC, and I realise HMRC are probably about to get very busy in January, so quite difficult to get through to with all the self-assessment. But what would you be saying to them? Like, what would be like the conversation? Like, how would that go?
You just tell them that you've made pension contributions and you're a higher rate taxpayer, and you would need those included in your tax code. And they'll probably ask you how much they are, and they'll make that adjustment through your tax code. I have to say, trying to phone HMRC or trying to write to HMRC is quite challenging at the moment. They're quite under-resourced. It takes a long time to get through, or for them to process letters. So often it can just be easy to register for a tax return and submit a tax return to get these reliefs. Okay. It feels like a bit of a hassle. It feels like it's more work than is needed. Actually, the computer systems work better with HMRC. They work more automatically. So often I find that just submitting this electronically via a tax return or via personal tax account will you'll get the money quicker.
Good top tip.
Gift aid works in a similar way. Obviously, the money, the basic rate tax that you can that the government will pay on a gift aid donation goes to charity. So again, using the £80 example, the £80 that you donate, the charity will receive £100 because they will claim back the £20 from the government themselves. But again, a higher rate taxpayer can get higher rate tax relief on gift aid. And again, using the same example of an £80 donation, a higher rate taxpayer will get £20 tax relief. So that donation will cost them £60, but the charity will receive £100. So again, that's not around your own financial planning, but if you're that way inclined to make charitable donations, it's obviously a really good thing to do, and make sure you're claiming the appropriate tax relief. And again, we've said this a couple of times already, HMRC won't come to you to prompt you to do this, even if you sign a gift aid declaration on your charitable donation. That is for the charity's benefit. In order to claim the tax relief, it won't trigger anything for your own personal tax relief. You have to be proactive and claim that.
Wow. And just so we're super clear in terms of where people claim that, is that still potentially putting in a tax return? Is that ringing HMRC, or there's no online specific forms for that side of things? Is that?
No, there is no, other than a tax return, there is no specific form as there is for employment expenses. So I don't know if, can you hear the vacuum cleaner in the background there?
It's just a very faint whistle, it's fine.
All right, I can hear it quite loud. So yeah, so it is more either doing it through your personal tax account, phoning HMRC, or doing a personal tax return. There is no specific form for getting tax relief as there is for employment expenses.
Super. I feel like we're getting a bit of a golden thread here of like, if you're in the know, there's chance for you to benefit from this stuff, but if you don't know it exists, nobody's going to tell you about it. So whether that's work-related expenses, like you've said, whether it's pensions, gift aid, and I know you're about to come on to talking a little bit more about salary sacrifice as well. That is another topic we get a lot of questions about, to kind of debunk what that is and what it means.
Yeah. So salary sacrifice it's most commonly used for pension contributions, and it's an alternative way to pay your pension contributions to get an additional bit of tax relief, or national insurance relief, really. And this applies to basic rate taxpayers as well as higher rate taxpayers. As we've just said on previous slides, if you pay the personal pension contributions yourself, it's only really higher rate taxpayers that benefit personally. Salary sacrifice is basically what it says on the tin. It's sacrificing some of your gross salary for an alternative benefit. And that is usually additional pension contributions. So you might sacrifice £200 a month of your salary being paid to you in exchange for your employer paying £200 into your pension on your behalf. And because that reduces your gross, what we call taxable salary, it means that you pay tax, national insurance, and student loan contributions on the lower amount. So
Okay.
not only are you getting tax relief for those pension contributions, you're getting relief against national insurance as well, and student loan contributions. So again, a really popular way of paying pension contributions. And again, some employers are more, you have to do this via your employer because it's a change to your contractual terms with your employer. So it's really important that you're proactive with your employer. Some employers will offer that to you, others will do it if you ask. But again, a conversation to have with your employer around that. It's, as I say, it's most commonly used for employer pension contributions, but it can be used for other things such as company cars as well.
Okay.
If you'd rather have a car provided or other assets. It is a change to your contractual terms with your employer, which can have other HR and employment law implications, but that's outside the scope of my expertise.
So people be coming to whoever runs the payroll, presumably, and just having a chat with them and asking whether salary sacrifice is an option and how to know a bit more about it, and they can get information from them.
Yeah.
Cool.
So kind of moving away from tax relief, I guess, into more ways that you can receive more money or more remuneration from your employer in a tax efficient manner. Benefits in kind is a fancy word for what we call non-cash benefits. So if you're getting paid a salary of £30,000 a year, it's in cash, you pay your taxes at source, you get the net pay paid into your bank account. Your employer can also pay you in a non-cash way, so they can give you the benefit of a company car, they can give you benefit of paying health insurance on your behalf, they can pay other expenses on your behalf, such as petrol costs or even accountancy fees, many other different things. And because it's not cash, HMRC have to find a different way of taxing that, which is what the benefit in kind system is.
Mm-hmm.
So those with benefits in kind will probably find that they get a P11D form from their employer at the end of the year, which shows you what the value of those benefits are. And those benefits are taxed, again, at your marginal rate of tax. If you're a basic rate taxpayer, the value of those benefits will be taxed at 20%, if you're a higher rate at 40%. And they're usually adjusted, those benefits are usually adjusted through your tax code. So again, it's collected at source by reducing the amount of tax-free personal allowance you have against your employment income. Company cars is a whole other topic on itself in terms of how company cars are taxed. The basic rule of thumb with company cars is the higher the CO2 emissions of the car, the more expensive that car is going to be to have as a company car. The more fuel efficient it is, the lower the CO2 emissions, or even hybrid and electric cars in particular. The calculations are much more beneficial and are extremely low, actually. I've got an electric car as a company car, and my benefit in kind is 1% of the value of my car, which is tiny compared to the value of that car. So again, a good thing to have an electric car, a hybrid car as a company car, not so good to have a very high CO2 emitting. They can be very expensive.
I've definitely seen people kind of come unstuck with that, because I know I very naively for a long time thought, well, if they give you a car, they give you a car, and there's no other implication to that. And I know I was talking to a friend who's a vet, and they'd been offered, I think it was like an estate car, and actually when they'd gone through all the calculations of what it was going to cost in benefits in kind tax, it was going to end up costing like £400 a month, by which time she could probably have just gone out and found herself a different car on an agreement for herself as well. So I can see that that's something certainly it's worth checking out. Is there a way for people to find out if someone offers them a car as part of a contract, like what tax implications there be to that? Is that something for the employer to tell them? Is that something they can find out somewhere?
I mean, ideally, a good employer would talk you through the tax implications of a particular car. You would hope. If not, there are lots of websites around that will calculate especially the lease companies will often have calculators for what the compensation is, and there's lots of car websites that will calculate them, because again, cars, it's often a selling point for the car if it's a cheap benefit in kind. So they'll often use that as a promotional aspect of the car. So there are lots of calculators online that will do that for you.
So worth checking out for people, definitely, if a company car is part of it, whether it's actually financially worthwhile or not.
Yeah, absolutely. And you say you can come unstuck if specifically you've got a very expensive company car and your tax code is not adjusted correctly. You can end up with some nasty surprises at the end of the tax year where you've actually just not paid enough tax on that company car benefit, and then HMRC will risk you for a lump sum, which then all gets a little bit messy. So again,
best avoided.
Yeah, the big CO2 emitting ones are definitely best avoided. They are very, very expensive in terms of company capitalisation.
And I certainly know that vets are often quite passionate about what type of car they drive. So yeah, before you go and order yourself that brand new Bentley, it's definitely worth looking into in a little more detail. That there is quite a lot around commercial vehicles, particularly if you're a farm or an equine vet. There may be some relief if your vehicle is classified as a commercial vehicle, but definitely check the small print, because it may require you, for example, to leave the vehicle at the work premises when you're not using it. You would be normally allowed to use it for after hours use, but only if you're on duty. So yeah, definitely, if that's of interest, certainly, come back to us or take some specialist advice.
Yeah, absolutely. Commercial vehicles are much more tax efficient as well, even if they're not pool vehicles. It's a much lower rate of benefit in kind, but they have to be, again, choose those commercial vehicles carefully. The devil's in the detail. So that's really considering benefits that your employer provides for you that are taxable. There are, on the right-hand side of the slide, very numerous benefits that are actually tax-free for your employer to provide on your behalf. And we've talked about employment expenses being quite restrictive in terms of employees claiming those themselves. But actually, on the flip side of that, where the employer provides those benefits, there is a greater range of tax-free benefits. But it's really important that the employer pays those to you rather than claiming the tax relief yourself. Pension contributions are a really good one. Employers can pay pension contributions on behalf of employees without any tax implications. That's a really good one. Employers can pay training costs as a tax-free benefit for their employees as well. We've just talked about mileage allowance on previous slides. You can be reimbursed up to 45p a mile for travelling on business. This is an interesting one, working from home allowance. Your employer can pay you the working from home allowance at £6 a week. But if they don't, again, under the tighter rules from this tax year onwards, it's very difficult to claim that yourself as an employee. So much better if you can get your employer to pay that to you. Trivial benefits is what it says on the tin. If the employer provides you a benefit that's worth less than £50 and is non-cash, then that's a tax-free benefit as well, because basically the administration of taxing that is more hassle than the tax that will be collected. So a good example of that is non-cash vouchers, a bottle of something at Christmas, the traditional turkey that used to be given at Christmas, things like that. A health screening, an annual health screening or medical checkup can also be a tax-free benefit in kind as well, which again, if we're thinking about health and well-being, be a really useful thing to provide to employees. Long service awards, you can pay for a limit per year for long service is a tax-free reward. Staff parties, your Christmas party, subject to a limit, I think £125 a year, can be a tax-free benefit. An employer provided mobile phone is a tax-free benefit. Cycle to work schemes, there are some generous schemes around buying bikes via your employer. If you have to work away, your employer can pay your incidental overnight expenses, a tax-free benefit. And there are many others. I've put a link on that slide there to the Low Income Tax Reform Group website, which is an excellent summary of all tax-free benefits and is a really useful thing to look at. Obviously, we're looking at this from an employee's perspective rather than employer's perspective. So this is around what your employer will provide to you. So perhaps some of those are good for suggestion boxes in the place.
I guess I was going to ask like two questions. The first one is if your employer gives you any benefits, for example, I know you put health screening and medical checkups, but if they provide you with private healthcare or they provide you with anything along those lines, like what does that count as?
Yeah, so health insurance. So if your employer pays you Westfield, Bupa, things like that.
I've just seen it on the other side, Nicola, sorry.
Yeah. An annual a premium for that. That's provided by an outside provider, then that is a taxable benefit in kind. But again, we do it here at Harris & Co. We have Westfield that come in once a year and do a very basic health check, blood pressure, blood glucose, things like that. An annual medical checkup, which we pay for. But again, because that's a one-off, that's a tax-free benefit provided by the employer.
And in terms of the working from home allowance, is there like a minimum amount of time that someone has to work from home? Because I'm aware we have some people that might do a day of teleconsulting or something per week, or they might do some work from home admin. Do they have to have like a set amount of hours that worked from home to be able to claim that?
Not from the employer's perspective. If you're claiming it yourself as an employee, the rules are very restrictive going forward. For the tax year 2021 and 21-22, there is no minimum. You can just do one day in the year and claim as an employee. But going forward, there are some very strict restrictions around working from home allowance. But no, from an employer paying it to you, no, there are no restrictions around that.
Well, I suppose it's worth everyone being aware of these tax-free benefits, because again, like you say, for suggestion boxes, for negotiation pieces, just knowing that they're available there is useful, definitely.
A different way of being paid almost, I suppose, in a way.
And benefits that we all need, right? Things like mobile phones, cycle to work, all useful.
Is there a bit missing on that slide on the left one?
There we go, animation on its way. There you go.
So we just cover a slide here on tax codes, because often this is where things can go a bit wrong for employees if your tax code's not quite right, especially if you've got multiple jobs or benefits in kind, things like that. So at a very basic level, a tax code is how your personal allowance is applied to your wage and how you get the benefit of that tax-free personal allowance of £12,570 a year. So that is the basic tax code. That's what most people are entitled to, unless there's an adjustment to be made from it. It's usually a deduction from your pay, so it's to give you that tax-free allowance each month to make sure you're getting the full benefit of the personal allowance across the tax year. But if there are adjustments to the tax code, then sometimes it can actually be an addition. You actually increase your wage before tax is applied. And that often happens if you've got a very expensive company car. So one to avoid. Again, we've just mentioned that it's usually the personal allowance of £12,570, but HMRC will use your tax code to try and collect things like the tax on your benefit in kind. They will adjust your tax code for that. If you've underpaid tax in previous year, you can have your tax code adjusted to pay that back. If you've got employment expenses we've discussed in previous slides, you can increase that personal allowance to get the benefit of those employment expenses through your wages as well. As I've said, there's tax codes can get a little bit tricky. So I've just popped on the right-hand side a few examples of hints and tips of things to do to make sure that your tax code's working for you and you're not going to get any nasty surprises at the end of the tax year. So firstly, HMRC should send you a copy of your tax code in the post. If not, you can log on to your personal tax account, which we'll come on to again in a future slide. You can download it from there. So please do check that it's correct, particularly if you've got any of these nuances like employment expenses, benefits in kind. If you've got multiple jobs, it's really important to be proactive with it. Log on and check that it's right or it looks correct to you. We've talked about this.
Sorry, Nicola. We just got a very apt question just at the right time where somebody said, where and how do you check if it's the right one? So we can log on online and we can see what our tax code is, but how do you
know that it's right?
Decipher that bit? Sorry if you're going to come on to that bit. I just saw it pop in just as you were saying that, so I thought it was a good point to bring it in.
Yeah, I mean, how do we know it's right? It's using what we've learned, I think, in today's webinar. Have we got the right employment expenses in there? If we've got employment expenses in there that we no longer have, so if we've been making pension contributions before, it's been in our tax code, but we no longer make those pension contributions, make sure that they're taken out of your tax code. If you've got RCVS expenses, in other kind of employment expenses that we've been discussing, make sure that they are in there. If they're not, again, be proactive and make sure that they are. If you've got benefits in kind, check what's being deducted from your tax code to your P11D. If you've changed cars, make sure that it's been updated for the change in car, so it's up to date. And multiple jobs, we'll come on to that in a second, but making sure that we've got the right tax codes allocated to the right jobs.
So just so, because I realise we'll have a tax code that's like 1270D or something like that. So if someone sees that, can they just Google what that particular code means and then they can cross-reference it? Like what does that look like?
Yeah, so there are HMRC do have various pages on the website that explain what the letters at the end of the tax code means.
Okay.
And also the tax code, just seeing, I think the question pop up in the chat around, it does give you a breakdown. It will not just give you the 1257L as a number with no explanation of what that's made up of. The tax code will break that down. It'll show you what your personal allowances that you've got, what deductions are being made for benefits in kind, what deductions are being made for underpaid tax, what additions are being made for employment expenses. So it sets it out line by line.
Okay.
And then also, if you have multiple jobs, it will show you on that tax code as well what tax codes are being applied to each job as well. So I guess it comes down to understanding what all these things means, which is why we're on this webinar talking about different things. But if you do understand and are aware of what all these different things mean to you and what they mean for tax, then I do think actually the tax codes are set out quite well. And there is information on the rear. HMRC will have a key on the back that says why they're doing certain things as well.
Amazing. So people can log into their own online tax record. They'll be able to find out how to do that. And then it'll be laid out line by line, which they can cross-reference back to what you've spoken about so far.
When you log into your personal tax account, there's lots of different boxes that'll tell you, do you want to check your tax code? Do you want to check your national insurance record? So it's just a matter of ticking on the right box and following it through. One key thing to be aware of, particularly having multiple jobs. I'm aware that a lot of veterinary professionals that have many portfolio careers. We might have IR35 roles, 0-hour contracts, full-time posts. So multiple, what we call pay-as-you-earn sources. Again, it's really important to keep an eye on your tax code to make sure that you've got the right tax codes applied to the right jobs. We see so often the personal allowance being given to 2 jobs. We are only allowed 1 personal allowance per year, and it can happen where both jobs will have a personal allowance allocated to it. So when it comes to the end of the tax year and HMRC only apply one, there'll be often quite a significant underpayment of tax. So that's really important to keep an eye on. And if you do have a second job, then you should see for the second job or third job tax codes that look like BR or D0, which are the right tax codes to be applied to those second jobs. So if you're a basic rate taxpayer and have a second job, you should have a BR code applied to that second job, which basically just means that they will just take 20% of tax from that second job. And a D0 code is the same for higher rates of tax. So if you are a higher rate taxpayer with a second job, a D0 code should be applied to that second job, and that second job will just deduct 40% of tax from that second job, which means that we're just getting that personal allowance once, as we've discussed. And I saw a good question in a group on Facebook a few weeks ago around, does that mean if we've got multiple jobs that we pay more tax than if we just had one job? No, it doesn't. You still, no matter how many jobs you have, if you add all that income together, you should pay the same amount of tax if you just had one job earning that amount. It's just a matter of making sure your tax codes spread around appropriately and taking the right amount of tax from each job, which can get a bit complicated. But again, going back to being proactive, checking and understanding what that means for you. Final hint and tip is if you do end up with an underpayment of tax because the benefit in kind is wrong or the tax code's not being quite full jobs, you can elect to have that underpayment of tax collected through your tax code in the following tax year, rather than having to pay a lump sum to HMRC in one go, which is equivalent to an interest-free loan from HMRC repaid in 12 instalments. So some people like that because they're not having to pay out a lump sum of a few £100, and they can make it in 12 instalments in the following tax year.
Super.
So I hope that makes sense. It's tax codes are very complicated.
I think it definitely makes sense. I mean, it's a revelation just to know that we can log in and see it laid out as what all of it means, come back through this, decide if there's anything that we're missing, and then get in touch so that we're all making the most of our taxes as employees. And I'm aware that just keeping an eye on time for everyone and for you, Nicola, as well. I know we'd got a couple of people that touched on this webinar that they might have a side hustle. So I know you've done some fantastic sessions for us going through this in more detail as well, which we can signpost to as well, because I realise this might not be everyone on here, but I know it's worth us quickly sort of going through.
Yeah, so side hustle, yes. If we earn less than £1,000 from a side hustle, we don't have to declare that to HMRC. If we do earn over £1,000 from a side hustle, a bit of self-employment, then yes, we do have to declare that to HMRC. I didn't realise time had gone on so quickly. So this slide really just covers the deadlines for registering for a tax return, submitting a tax return and paying tax that's owed should you be required to do a tax return. I'll not go through those in detail because it's probably not relevant for everybody on the call. And just on the right hand side, I think one of the pre-submitted questions, how do I know whether I need to do a tax return? But the options on the right hand side are the most common reasons for an employee to have to submit a tax return. And for example, if you earn over £50,000 and claim child benefit, because child benefit starts to be clawed back over £50,000. If you earn over £100,000, you have to complete a tax return. And again, we've covered if you claim employment expenses over £2,500, you have to claim that via a tax return. But then there are lots of other reasons to do one as well, such as having a side hustle, having investment income. And the link that's there is, again, a really good self-assessment checker on HMRC's website, which answers lots of questions, and I'll tell you whether you have to do one or not.
Amazing. And you did a great session for us in August as well about side hustle income, where we go more into detail of when you do and don't need to look at self-assessment as well. So we can make sure that we link to that, and it's on our YouTube channel as well. So everyone definitely have a look. And I was just going to dive in real quick because we've got a question that had come up that I'm just conscious to answer as well, Nicola, which is going back to when we were talking about mileage. I said, when you talk about mileage allowance as a tax-free benefit, is that personal or commuting miles in a company vehicle? Just so we're really clear on like what can and can't be claimed as mileage.
It's business travel. So your normal commute to and from your permanent workplace is not tax allowable, tax deductible. It's got to be travel for business. So as we said, it's going out to do home visits from the practice, perhaps attending a training session that's off-site, visiting for business purposes, not your normal day-to-day commute to work.
And if you've got a commercial vehicle, can you still claim mileage if that's a vehicle through work, or is that something that work would be doing?
If it's your own car, you can claim the 45p a mile. If it's a company car, you can still claim for the cost of the fuel. It's just a lower rate because it's just a fuel rate. And again, that changes every 3 months, and it depends on the size of the engine in your vehicle. So again, that's something to look up on the gov.uk website, the fuel rates for company cars.
And I guess just to clarify with your employer as well, if you're using that, just to make sure that you're doing everything as per, if there've been conversations about it or not, I guess.
The employer should, from a tax perspective, because there's tax implications for the employer as well. So if you're making claims that are inappropriate from a tax perspective, then your employer, the financial controller, should be making you aware of that, because there's implications for them as well.
Amazing. Here we go. And this is what you talked about, wasn't it? Our personal tax account.
Yes. We'll not go into too much detail again on this as well. This is just a summary of all the things that you can access through your personal tax account and all the things that you can do with HMRC on your personal tax account. Again, a very simple Google of personal tax account will take you to the page. You have to register with the government gateway and things like that to get into it. But once you're in it, it's a really useful tool. You can check, very depressingly, you can check your state pension that you're entitled to. You can check your national insurance record. You can deal with child benefit claims. You can check your income tax. If you're due to a tax repayment because you've overpaid tax through pay as you earn, you can claim it back through the personal tax account. So again, just advise, just register, make yourself familiar with what's on there, have a look. You can't break anything just by clicking on a few links and having a look around. There's a lot of useful information on there.
Awesome. And just like a top tip from having experienced it myself, they probably give you some very significant numbers as like login numbers and things like that. I say this from like going, oh yeah, that's nice, I'll pop this somewhere, and then you need it when you come to log in. So pop it somewhere safe, make a note of it, because HMRC aren't the ones just to re-email you something that you've forgotten. Quite often they have to post it back out to you, which is a delay by some time.
Yes. Yeah, it's not an easy number to remember, and it's not as easy as just tapping in your email address. So yeah, top tip, keep it safe. Yeah, I think we've kind of covered this, Katie, with side hustles. We don't have to declare any sole trade or self-employment income, side businesses if our sales are less than £1,000. If they are, then we do. And then our margin, what we call our marginal rates of income tax, apply to that income straight away. We don't get another personal allowance on that. So if you're a basic rate taxpayer, we're straight into paying 20% tax on that.
And we can make sure that everyone that's watching the recording and on the call as well, and we can check out the whole Side Hustles webinar that you did for us, where we cover all of this and in more detail too. And I know this is a big topic in itself.
I've just included it because IR35 is really relevant, because it's around employment taxes, but it is a whole other webinar in itself. And I think you've had one of those, haven't you, Katie? So again, probably signpost people to that for more information. But again, it's just making you aware that if you're under an IR35 contract, if you're working for an umbrella company, then you will pay as you earn taxes and other costs via the umbrella company or the IR35 contract.
Amazing. And I feel like we covered so much ground there in terms of like actionable steps for people to take, so they can look through claiming expenses like employment expenses, like you said, whether that's memberships, whether that's maintenance of uniform, looking through that list that you gave. Can also start to look at and like logging into our personal tax account, checking tax codes, coming back to our employers and checking in on some of those benefits that we do and don't receive, checking in on whether around our pensions, like if we've got salary sacrifice. There's so many actionable points that people can take away and just go and check that might actually gain a little bit, or like you say, avoid a nasty surprise if we've checked these things earlier on.
Yeah, absolutely. And I think the top tip is just to check out register for your personal tax account, have an explore of it, check things out, because most of the things that we've discussed tonight are all actionable via that personal tax account.
Yeah.
So just get yourself familiar with it and just make those claims. Nobody's going to give them to you. You need to go and make them yourself.
Yeah. And it's easy to do as well, isn't it? Right? They guide you through the processes on there and the information's out there. Because I know when I first found it, it was a good few years back. I was like, my goodness, is this going to be quite overwhelming? Is there a lot to do? And actually, the reality was it was quite straightforward, and it was just nice to get that check back in the post afterwards and realize that I could reclaim the tax that I'd paid on those expenses. That, again, like you say, our CVS membership, there is, and we signposted it on that link, a whole list full of memberships that they will cover. And there are so many veterinary association memberships are on that list. So it's worth checking out.
It is, yeah. Same with medical professionals. There's so many subscriptions that you pay and claims that can be made that it can be a really valuable source of minimizing our tax burden, shall we say.
Definitely. So if, as an example, let's say we'd spent £1,000 in the year on memberships, we're a 20% rate taxpayer, we could potentially get £200 back.
Yeah, and it's an important point to make that, Kate, as well, because I think it's a misconception that many people think that if they're making a claim for £1,000 worth of expenses, they're going to get £1,000 back. You're not. You're just getting the tax that you have paid on that.
Yeah.
Those expenses that you're making a claim for.
I mean, if we can go back 4 or 5 years potentially, and we're doing £1,000 a year that we've paid but never actually claimed back, then suddenly it mounts itself up. I know you said we do have to do self-assessment if those expenses go over £2,500 a year, but still it's a fairly meaty amount back if we spend that hour or so going through and just making sure we've claimed it all. So awesome top tips. If anyone has got a last minute question, drop it into the chat box. I'll keep an eye out for that, because we've covered so much ground this evening. I think looking through those questions that we got at the beginning in terms of company cars, in terms of things to be aware of as we go per tax bracket, I think we've really touched very well and very clearly on those through here. So if anyone's got anything extra that they want to add in, then please do. Okay, so we've got one question here. Another vehicle question. Part-time farm vet. I have a company van, which I do take home as we back each other up on out of hours. And also I probably travel straight to my first call at least 50% of the time. How can I pay less tax for this? I never drive it unless I have a work uniform on. It literally just takes up space in my yard.
Yeah. So if it's a van, it's a commercial vehicle, that's a good start, because the tax on that, if you do have personal use for it, is less than a car. Most cars anyway. It's a flat rate benefit. With vans, you have a benefit if you have personal use of the vehicle. If you only ever use it for business purposes, then there is no benefit in kind, and there doesn't have to be one charged to you. But to be able to prove to HMRC that there is no personal use, or it's not able to be used for personal use, is quite a tight, again, restriction. And often you would have to see things in employment contracts that don't allow you to use it, and also the insurance for that vehicle being for business use only, with no social, domestic and commuting use. So again, quite restrictive in the use of the vehicle. If it was a pool vehicle, so it was available for more than one employee to use, it was parked at the employer's premises, then again, that is not a taxable benefit on the employee because it's nobody's vehicle, it's a pool vehicle. But again, HMRC would want to see lots of rules in contracts and policies that meant that it could only be technically used as a pool vehicle. So I think for flexibility, having a van is probably the most tax efficient way you can do it without starting to get into some serious restrictions about the use of that vehicle, which may then make it a hassle to use or make life a little bit more difficult because of the restrictions that have to be imposed.
And in terms of if this community member wanted to go and discuss that in more detail with someone and check those ins and outs, like who is the professional or who's the first point of call to speak to around that, Nicola?
I would go to your employer and have a chat with the financial controller there. If they're not aware of it, I don't know if it's a small business, they might not be aware of the rules in detail, but they should certainly have an accountant that the business should have an accountant that can advise on that as well in detail. And I'd go there first, because the alternative is for the community member to take that advice themselves, which is going to cost them money for a vehicle that's been provided.
Yeah.
By the employer.
And Paul's made a really good point in the chat as well here. As Paul and Matt obviously have background in farm vetting, and said be careful in claiming that the vehicle is never used for personal use and so shouldn't have any tax paid. If you crash the vehicle and it turns out you were doing personal miles, a quick pop to the shops, then you might not be insured. And I hear you. I can see we just had a comment back to the last question saying frustrating to pay for a benefit that isn't one. At no point would I choose to do my personal miles in my Cowie van. I hear you 100%. So true. And like you say, Nicola, perhaps that's a conversation to go back and just to have and understand the ins and outs at the level of their like financial control team and see what can be done now, knowing the whole landscape of pros and cons to it.
Absolutely, and every case kind of turns on its facts. So if it is a very Cowie van, to use your phrase, that literally you would not use for personal use, then it may be more easy to justify it as just a work vehicle. But again, Paul's comments valid. It's how restrictive you want to make the use of that vehicle, in terms of, I don't know, sometimes the tax saving, the inconvenience you create by the tax saving is more hassle than it's worth in terms of the tax saving. So every case turns on its facts. So I would just speak to the finance people at work and see what suggestions they've got.
Amazing, thank you so much. And I whizzed through that bit there. I realise that we are coming up to the end of our time. As ever, Nicola, thank you so much, because you've covered so much for us here. There are so many actionable steps, so many seeds of information. I know I've learned a lot, and certainly this is a topic I've heard a lot about with what we do at VetU. But thank you for covering so much ground and for giving us your expertise, and for the continued support that Harris & Co give to our members of the VetU community as well. So thank you so much for being with us this evening, Nicola. It's been brilliant, and I can see I've got a couple of anonymous thank yous that have come through to me, but please do let us know your top take homes and what are going to be your actionable points at the end of this session, so that we can hold you accountable and we can reflect on what we're going to do. I can see we've got thank you, just registered and check my tax code. Good work before we've even finished the webinar. Thanks, Nicola. It's been really useful. I'm so glad this has been helpful to everyone. You can see on the screen at the moment, and we'll make sure that this pops in the chat box too. But if anyone does want to book in and speak to Nicola about self-assessment tax returns. If you've got companies, you need any help around limited company management and limited company tax returns. If you are a locum or you're thinking about it, you're looking for an accountant, Nicola is brilliant and her entire team. So that is an option if you do want to book in and speak around needing an accountant. We can signpost those details too. Make sure you're registered with us at vetyou.co.uk. Many of you have come from our newsletter anyway. And don't forget, we've got another session that we're running with Ruth Downs, a financial advisor, on the 20th of December, which is all around pitfalls in personal finance, where we'll be talking all about things like income protection as veterinary professionals, pensions, savings, investments. We'll be answering your questions as well. So please do make sure that you tune in for that one. We'll pop the sign up link in the chat box and we'll grab that for you now so we can make sure we have signed up. And also if you do want to book in with Nicola too. So Nicola, just a huge thank you, and thank you to everyone that's been on this evening too. It's been brilliant.
Thank you for having me again.
You've been fantastic as ever. And I can see we've got Paul and Matt back on. I'm going to stop our recording.